Creating a crypto portfolio is hard, very hard in fact. So unless you were sat there back in 2011 celebrating Bitcoin hitting $1, then you're very likely new to crypto. And venturing away from Bitcoin for the very first time might be an uncomfortable step to take. So in this video, I want to share my thoughts on what altcoins you should be really considering first when it comes to building a portfolio after Bitcoin to ensure you're punching your ticket to explosive growth. Well, if crypto follows the direction many think it's going to. And then topping it off with my personal picks before, of course, checking in on my crypto.com portfolio to see how I've been performing over the last month and what changes I've made and what I might be making in the future. If you're a curious onlooker of crypto with no skin in the game, then I have the deal of a lifetime for you. If you use my link in the description, you'll receive $25 worth of free crypto. No deposit required. If you simply do this and leave it, then it might grow for you. Personally, my free $25 has actually turned into $92 in just 9 months. Not bad considering it's free. Let's jump into it. So, you understand cryptocurrencies by now. The clue is really in the name. They are currencies or medium of exchange. Bitcoin, Litecoin, XRP. They're simply there to exchange. Nothing really more exciting than that. But after this, you might start to feel a little bit lost. Different tokens, dApps, NFTs, smart chains, proof of stake, you can quickly spiral. So let me keep it simple. For the premises of this video, let's oversimplify the space by saying there's 3 broad categories of crypto. You have cryptocurrencies, as discussed, mediums of exchange like Bitcoin and many others, while the final 2 categories are layer 1 networks and layer 2 protocols. Might sound complicated, but I promise it's not. Think of layer 1 networks as a network of roads across the country. This is the infrastructure to facilitate transport. If layer 1 networks were the roads, then layer 2 protocols would be the different sorts of road users you would find. People would use the roads for lots of different reasons. Driving to work, transporting goods, shared transport, cycling for exercise, or maybe they're fetching me my Deliveroo. All of these different methods of transport are taking the benefit of the infrastructure, which is the road. The layer 1 network. Well, the same concept goes to crypto. The vast amount of crypto projects are not interested in creating their very own infrastructure. It's far easier to piggyback off an existing layer 1 network, just like how I'm currently piggybacking off YouTube in order to publish this video on my YouTube channel. YouTube is a platform and I am the user. So why does this distinction matter? Well, if you're looking to invest in the crypto space to ensure you have exposure in case the adoption becomes widespread, then it would make more sense to own the platform rather than picking one of the thousands of users on its platform. Think about it. The world's biggest companies are platform holders at the end of the day. Alphabet owns the gateway to the internet, Google, but also owns YouTube. Amazon has its online retail platform as well as Twitch.tv. Apple has its App Store, and Meta obviously has its social media platforms, Facebook and Instagram. These companies have made it incredibly easy for others to build businesses on their platforms. All the while, there is heavy competition between layer 2 businesses to stand out on these platforms. Layer 1 businesses do not care who wins, as long as they're wanting to build their businesses with them. Based on this, if you're in crypto just to gain exposure to the space, it's a no-brainer to focus on layer 1 networks as opposed to layer 2 protocols. So let's take a closer look at what layer 1 crypto networks are available to us as investors. To prioritize the hundreds that are out there, let's look at the top 5 as by market cap. So in order of market cap, we have Ethereum, Solana, Cardano, Polkadot, and Avalanche, with a combined valuation of 670 billion. So, if there are so many options, how do we go about picking the likely winners in this space? Well, again, we need to go back and look at more traditional platforms outside of crypto. All established platforms share the same characteristics. They have extremely large scales. The larger this is, the stronger they get as the network effect compounds. After all, who wants to join a social media site with just 2 people compared to 200? So if the scale is important to the success of these platforms, what metrics should you be looking at to judge the scale of these platforms? Well, there are several. We've already covered market cap, but let's look at 3 other important factors. First is the number of validators on the network. These platforms, as they're built on blockchain technology, need validators to make sure they remain decentralized. The requirements to do this is just really to have a computer which is capable of performing the tasks of being a validator, and normally to stake a minimum amount of the required crypto to do this. Obviously, the number of validators shows us 2 things. 1, how decentralized the network is, and 2, how popular the network is. So how many validators do these top 5 platforms have? Well, Ethereum has 268,000, Solana has just short of 1,300, Cardano has just under 3,000, Polkadot doesn't even have 300, and Avalanche has 1,203. As you can see, Ethereum is by far the largest of these networks, nearly 50 times bigger than the next four combined, and nearly 1,000 times bigger than Polkadot. If we are looking for scale, then this is a very big indicator that Ethereum would be likely at least one of the layer 1 networks which would make it in the long term. This gives Ethereum an unparalleled stability, security, and obviously adoption. A lot of characteristics you'd be looking for if you're building a layer 2 protocol. Next, it is worth looking at what percentage of the outstanding supply of the given cryptocurrency is staked on each of these 5. Staking is vital to the proof of stake systems which the majority of these platforms are based on, meaning how much of the given crypto is locked up being staked. This obviously gives a platform more stability, as larger amounts cannot be liquidated instantly, as only a certain supply can be bought and sold. It's a massive sign of commitment to these platforms. So the 5 mentioned, we have Ethereum at 7%, Solana at 76%, Cardano at 70%, Polkadot at 54%, and Avalanche at 58%. The obvious one which sticks out here is Ethereum, as the others float between half to 75% of their market cap, all being staked at once. But there are a few reasons why Ethereum is so low compared to the others. The most obvious one is that Ethereum is only just starting to move over to a proof of stake system rather than a proof of work. There are some other factors like Ethereum requiring you to stake 32 Ether to run a validator or a node, with 32 Ether being valued around £100,000, which obviously the majority of people do not have. Equally, there is an opportunity cost to this, as there will be other proof of stake networks which will be competing for the support from these stakers. So they're naturally going to gravitate to platforms which can offer a higher return. But when we talk about opportunity costs, what we mean is the real staking yield, or how much are individuals getting back for staking as a percentage. This will be a huge incentive to wannabe stakers to their given platform. So the top 5 have the following: Ethereum at 5%, Solana at around 6%, Cardano around about 6%, Polkadot around 14%, and Avalanche just over 9%. It's worth stating that all these returns are extremely good on the backdrop that interest rates are so low at the moment, but it would make sense that lesser established platforms need to work harder and offer better incentives to attract people to their platforms. In the future, it'll be worth looking at the activity on each of these platforms, which will be a really good true measure of adoption. However, we're at the point where not all these platforms have fully launched yet. For example, Cardano do not currently have any decentralized apps running, while Ethereum has over 3,000. Personally, this is a very new space, and I believe a solid portfolio should really have exposure to at least all these 5, as they are the top ones in this sector. However, due to the sheer size of Ethereum, which is now over 50% of the same market cap as Bitcoin, it would be by far my favourite out of these 5. Saying this doesn't currently align with my portfolio, as my small holding in Solana has pumped significantly over the last 3 months, making it bigger than my current holding in Ethereum. For me, this means I need to ideally rebalance my portfolio to ensure that my holding in Ethereum is larger. After all, Ethereum's market cap is nearly 10 times that of Solana's at the moment, even after its pumps. But I guess this brings us to my portfolio update. If this is your first portfolio update, then let me bring you up to speed very quickly. I started out investing £2,000 into crypto in just March this year, so not very long at all. My strategy was not to try and pick the winners, but to try and get a good spread of cryptocurrencies weighted by market cap. Basically, I want to gain exposure to the crypto market rather than backing certain projects. As of last month, my portfolio was valued at £7,400, and taking off roughly £2,000 which I've received in referrals means that my initial £2,000 has grown 1.5 times, but the valuation has been as low as £1,900 but as high as £9,500, so it has fluctuated a hell of a lot. So over the last month, my crypto portfolio actually hasn't moved a hell of a lot. It's currently valued at £8,395, which is very misleading, as I currently have roughly £1,339 on my Visa Crypto.com card. So in reality, I am way below, or just above actually, £7,000. I'm actually pretty excited by the fact that it's worth around £7,000 at the moment, as we're sat a good way off the crypto market's all-time highs. The total market valuation is about 2.1 billion, so it'll take a 35% upside to rematch this peak, which will put my portfolio over £10,000 for the very first time. It has been a busy month though in terms of changes to my account. Following CRO going to the absolute moon last month, I made the decision to stake £3,000 of my CRO in order to unlock the Jade green card, as this gives significant jump in benefits over the Midnight Blue card and Ruby Red card. It means I could now get a 100% rebate on my Netflix subscription as well as Spotify, and it also gives me a massive 10% stake reward on my £3,000 worth of CRO. And then overall, I get generally better returns on any other cryptocurrencies that I might be staking on crypto.com. This is why I finally made the move to loading up my card, as I now get a 3% rebate on anything I spend on this card. I've only been using it for a few days now, but I've already made £5 as I've done a few big food shops. In terms of changes to my portfolio, I did take the opportunity to sell out of £600 worth of CRO that was above this £3,000 mark. I've put around 500 into Bitcoin, and I've used the remaining to buy Luna, or you might know it as Terra, as I didn't have any exposure to this in my portfolio, and it's currently ranked the 10th largest crypto by market cap. This means I now have holdings in all the top 20 crypto coins in the market, with a further 30 dotted across the top 150. In terms of going forward, I'm likely going to sell any additional CRO I might get over the staking requirement to further rebalance my portfolio. The majority will likely still go into Bitcoin, as if you ignore how much I've got in CRO, Bitcoin only makes up 20% of my portfolio, and it really should be around 40%. But following my research for this video, I would really like to add more Ethereum at a ratio of probably half the amount to what I'm putting into Bitcoin. If you're interested in knowing where the rest of my money is invested, then feel free to click on the video on the screen right now. That's all for this video. Merry Christmas, and see you in the next one.